Hi, and welcome to Trading with TK, teaching you to turn ideas into money. We're at www.tradingwithtk.com, and this is our weekend question and answer slot where I try to answer some questions that some of my readers send in to me. And I got a couple of questions, and I'm going to combine them all into one big long answer, and maybe you'll get a much better understanding as to how I make my decisions. The first letter comes in from Mary Joyce, and after saying some nice things about me, she wants to know, how do I filter out the noise and how do I focus on the real information? Good question, because I think that's what we're all trying to achieve. The next question comes in from Rich in Connecticut. He says, in your midday observation, you mentioned the word transference. And this is more than the first time you've mentioned this. Could you please talk about it and explain to us exactly what you mean by it and how does it apply to trading? Excellent question. And another question that always comes in is, why do I pick $1, $3, $5, and $8 stocks? So I'm going to take all three questions and I'm going to answer them sort of like in a overall strategy as to how I go about making my decisions. Besides the technical charts, there are other things that go into it, okay? What you try to do is avoid making mistakes. That's paramount. Okay, so the reason I pick such low price stocks is because it's easier for a 3 to go to 6 or a 6 to go to 12 than it is for a 30 to go to 60 or a 60 to go to 120, okay? And all these stocks are solid companies. They're probably in a economic down cycle as far as earnings are concerned. None of them, as far as I'm concerned, are anywhere near on the verge of bankruptcy. And even if they are, they're only $3 or $4. It's like buying an option that expired worthless on you. And I never have that much money tied up in any one of them where it's threatening to me. And that's why I can, when they drop down 10 or 15% on me, that's why I have the staying power to know that they'll come back. They'll come back a lot faster than a $100 stock that went to 2, like Bear Stearns, which will never come back. So that's why I like these low price stocks. You get a good bang for your buck. Another example of the low price, for 3 going to a 6 or a 4 going to an 8, is China Precision Steel, CPSL, which we played not too long ago. If you want to see what I'm talking about, check out the stock. So this is why I prefer this area of the market. There's less risk in it. Let's take the other side of the equation, okay? Now, a $100 stock can go to 2. Bear Stearns, an example. WCG went from 120 to 20 in 5 trading days. Will it ever get back to 120? It might, but it's going to take years, not weeks. So a 2 can go to 100, a 5 can go to 100, but 100 can also go to 5. And that's where the risk comes in. Does it happen all the time? No. Is it possible? Yes. And that's, I hope you understand why I like these lower price stocks. It's a game of numbers. 3 can go to 100, but 100 can go to 3. Okay, I hope that clears that up. If you have any further questions on that, send me an email. I'll see if I can answer it. How do I focus out the news and this transference? This is all tied into the same topic, okay? The reason why I don't want people sending me news items or information that they think I should know about, or let me know that there's a certain meeting or a drug's going to get approved or not going to get approved, is because of this, okay? All news, good or bad, as you see it, depends on the person reading it, touches a emotional plug in you, a button. It always induces an emotion. And in trading, anytime you make a decision based on emotion, 9 out of 10 times you're going to wish you didn't do it. This is how I try to protect myself from falling into this emotional trap, and it's a trap. And Brian Shannon talks a little bit about it in his new book, and he's probably one of the only other technicians I know who touches on the topic, and it's so important. What will happen is, if you're short and bad news comes out, it will keep you from covering the short where you should, because you start to believe the news. If you're long the stock and bad news comes out, you'll sell it down into the crowd when you shouldn't be selling it. 2 days later, it'll be right back up again. So no matter what side of the equation you're on, when you react to news, chances are you're going to wish you didn't. Even though for a moment it's going your direction. 2 days later, you're going to say, oh, I wish I had covered that short on that news. Or I wish I had sold that position on that good news. It keeps you from doing what you should be doing. And this is why it's so dangerous, these news items. So when I ask you not to send me the news, this is what I'm trying to protect myself from. I've learned over the years, this is the only way to do it. And the transference part is this. This is what the transference is, this is how I would describe it. When you read the news, it sparks this emotion in you. It could be fear, anger, joy, whatever that emotion is, okay? When you send me that email or that news, you are transferring that emotion from yourself to me. And I don't want it. It complicates my thinking process. It interferes with my thinking process. There's a saying in trading, all news is old news. It's already in the market. Everything I need to know, I'm looking at on those charts already, because the people who really know the inside news are already trading on it, and it's going to show up in the chart. Everything I need to know is in front of me, not outside of me. And this is why I ask you not to send me any kind of these news items. And another area of this is that when you, if I highlight a stock and you disagree with me, that's fine. But please don't turn it into a personal argument where you send me an email telling me how wrong I am. If you don't agree with me, fine. Just don't take the trade. Wait till something comes along that you do agree with me. Don't turn it into a personal battle as to who's going to be right and who's going to be wrong. This is like the game of golf, where the golfer isn't playing against the guy he's playing with. He's playing against the golf course. That's the competitor, is the course itself. So the market itself is the competitor, not each one of our players. So that's another reason why I say, if you don't agree with me, fine. Don't start an argument with me as to why I'm wrong and all this other stuff. Okay? Once again, it's all transference. You are transferring your emotions onto me, and it's not healthy for anybody. I'm sure you're not aware of it. I'm sure most people think you're being helpful, but it's not. People would say to me, I probably shouldn't tell you this. And as soon as they say that to me, I say, well, then don't. I hope that explains my transference issue. That's my explanation of it. And on a psychological level, that's basically what's going on, is you are unhappy, you're frightened, you're confused, you're some kind of emotion about this news that you're aware of. So you can't carry the burden by yourself, so you're going to dump it off on somebody else. But please don't let that be me. And I appreciate your understanding. It's one of my vulnerable sections, and this is how I try to focus out the noise, Mary. This is one of my methods. Anyway, I hope that answers all the questions about transference, how I filter out noise, why it's important not to get emotional, and how you can protect yourself from getting emotional. And till Monday, this is TK signing off.